All right, so today we're diving into VAT rates for restaurants in the Netherlands. You know, something that's always top of mind for owners. We've got a great blog post here from Menuviel. What are the current VAT rates for restaurants in the Netherlands? It's full of really practical tips. And something that caught my eye is this reduced VAT rate for certain food items. Kind of curious to see how that impacts the bigger picture of pricing and profitability.
Yeah, it's fascinating because VAT, value-added tax, it's not just some random number. It actually kind of reflects the government's choices about taxing what we consume.
Yeah.
And for restaurant owners in the Netherlands, getting a grip on VAT can really make the difference between, barely making ends meet and actually turning a decent profit.
Makes sense. So let's break this down a bit for our listeners. If you're a restaurant owner, why should you really care about VAT in the Netherlands? What makes it such a big deal?
Well, think about it this way. Every time someone orders a meal at your restaurant, VAT is built into the price they see on the menu. It's a consumption tax that's added at every stage of production, from the ingredients you buy to the final dish you serve.
So if VAT is already included in the price customers pay, why is it such a headache for restaurant owners? Wouldn't it just be a matter of collecting that VAT and passing it along to the tax authorities?
It's not quite that simple. The key here is that different items have different VAT rates. So in the Netherlands, you have the standard rate of 21%, which applies to things like alcoholic drinks and luxury services. But then there's this reduced rate of just 9% for most food items, non-alcoholic drinks, and even takeaway.
Okay, now that is interesting. A lower VAT rate for food, that must be a big relief for restaurant owners, right? I mean, wouldn't that standard 21% rate make eating out way too expensive?
Exactly. Imagine a world where your morning coffee or a simple sandwich costs 21% more. That reduced 9% rate is there to make food and essential services more accessible to everyone. And for restaurant owners, it means they can keep their prices competitive without, sacrificing their profit margins on those everyday items.
Right. But it also means that as a restaurant owner, you have to keep track of which VAT rate applies to what. You can't just slap a 21% VAT on everything, right? It's all about knowing the details.
Precisely. And this is where things can get a bit tricky, especially if you're importing ingredients. Those imported goods are generally subject to VAT when they enter the Netherlands, regardless of your business's VAT registration status.
Wait, so even if you're a small restaurant that's exempt from charging VAT, you still get hit with VAT on your imported ingredients? That seems a bit unfair.
It can be a tough one to swallow, especially for those small businesses trying to keep costs down. But this is actually where being VAT registered can work in your favor. Because if you're registered, you can actually reclaim the VAT you paid on those imported goods. It's like getting a rebate on your expenses.
So being VAT registered might be a headache in some ways, but it also opens up opportunities to reduce your overall costs. I'm starting to see how this whole V8 thing is a bit of a strategic game for restaurant owners.
It is. There's a lot to consider. And speaking of strategic decisions, let's talk about VAT exemptions. There's a small business exemption in the Netherlands for restaurants. With an annual revenue below €20,000, they can operate completely VAT-free.
Wow, that sounds amazing. No VAT to worry about, just focus on building your business. What's the catch?
Well, the catch is that you miss out on reclaiming VAT on your purchases. So while you don't charge VAT to your customers, you can't deduct it from your expenses, like those imported ingredients we were talking about.
So it's a trade-off. You get simplicity, but potentially higher overall costs. I see why deciding whether to register for VA would be a big decision for a small business owner.
Exactly. It's about weighing your options and figuring out what makes the most sense for your specific situation. But let's say, for the sake of this deep dive, that you've decided to register for VAT. Either because your revenue is above that €20,000 mark, or you want to take advantage of reclaiming VAT on your purchases. How do you actually go about doing that in the Netherlands?
Yeah, is it one of those bureaucratic nightmares where you're drowning in paperwork for weeks? Because I know how much restaurant owners love paperwork.
Actually, the Netherlands has made it surprisingly straightforward. You can do it all online through the Dutch Tax and Customs Administration website. You'll need your basic business details, proof of address, and a description of what you offer. Pretty standard stuff.
Okay, so it sounds relatively painless, but once you're registered, what are the ongoing requirements? What kind of hoops do you have to jump through to stay compliant?
Well, this is where good record keeping becomes your best friend. You'll need to submit VAT returns every quarter, reporting both the VAT you collected and the VAT you paid. Think of it like balancing your VAT checkbook every 3 months.
And I'm guessing the Dutch tax authorities aren't too forgiving if you mess up those calculations or miss a deadline.
Let's just say they take compliance very seriously. We're talking potential fines, interest charges on late payments, and even audits. No one wants to deal with that.
Definitely not. So what's the best way to avoid those unpleasant scenarios? Besides hiring an accountant, which I'm sure is a good idea for most restaurant owners.
Absolutely. But even with an accountant, having a good system in place is key. Organize your invoices, receipts, and sales data. Think digital filing systems or accounting software that can automate a lot of this for you.
Okay, so ditch the shoebox full of receipts and embrace the digital age. Makes sense. So we've covered the basics of VAT registration and staying organized, but let's get to the heart of the matter. How do you actually calculate and apply VAT to your pricing? Because that's ultimately what impacts your customers and your bottom line.
Right, that's the million-dollar question.
Yeah.
And to answer that, we need to talk about the two different approaches to pricing, VAT inclusive and VAT exclusive.
Ooh, two different approaches. I'm intrigued. Let's break those down. Because I have a feeling this is where things could get really interesting, both for restaurant owners and their customers. So VAT inclusive and VAT exclusive pricing, what's the deal?
Well, with VAT inclusive pricing, the price you see on the menu is the price you pay.
Yeah.
VAT is already included, so no surprises for the customer, nice and transparent.
Right, so that's what I usually see on most menus. Makes sense. Nobody wants to do extra math when they're hungry. But you mentioned VAT exclusive pricing. When would a restaurant use that?
You're more likely to see it in business-to-business situations. Like, let's say you're catering a big event for a company. You might list your prices without VA and then add it as a separate line item on the invoice. This is because businesses, unlike us regular folks, they can usually reclaim the VAT they paid.
So it's about keeping the accounting clean for businesses. Makes sense. But let's get back to the restaurant setting. Say I'm a restaurant owner trying to figure out how to price my dishes. How do I decide whether to absorb that VAT cost or pass it on to my customers? Because let's be real, nobody wants to raise prices unless they absolutely have to.
It's a balancing act for sure. You want to stay competitive, but you also need to protect your profit margins. One thing to think about is your target market. If you're running a fancy restaurant where people aren't so worried about the price, you might have more wiggle room to pass on some of that VAT cost.
But if you're catering to a more budget-conscious crowd, absorbing some of that VAT might be the way to go to keep your prices attractive. So it's all about knowing your audience.
Exactly. And this is where that reduced 9% VAT rate on food can be a lifesaver for restaurant owners. It helps them keep prices reasonable without taking a huge hit to their profits, especially on those everyday items like sandwiches, salads, coffee.
It's like a little buffer built in. But what about those items with the standard 21% VAT rate? Things like alcoholic drinks, which, let's be honest, are often high-margin items for restaurants.
Yeah.
How do you manage that without scaring customers away with crazy prices?
That's where you got to get strategic with your pricing. Find that sweet spot where you're covering the VAT, keeping a decent profit margin, and still keeping your prices in line with the competition. It might mean adjusting your markups or getting creative with your offerings.
Like maybe bundling a high VAT item, like a fancy cocktail, with a lower VAT food item to create a special offer. That way you offset some of that VAT impact without making it feel like a price hike.
Exactly. And don't underestimate the power of a well-designed menu. You can highlight those dishes with lower VAT rates or higher profit margins and kind of nudge customers towards those options, a bit of subtle persuasion.
So it's not just about crunching numbers, it's about using VAT as a tool to shape your menu and influence customer choices. I like that. It's like a strategy game, but instead of moving pieces on a board, you're moving prices and menu items around to maximize your profit.
It is. There's a lot of psychology involved. Remember, even if your prices are totally justified by VAT, customers might still react negatively if they think they're too high. So it's about balancing those financial considerations with customer perception.
And that's probably where clear communication comes in. If you do need to adjust prices because of VAT, maybe explain it to your customers, let them know it's not you just randomly raising prices, but you're responding to these external factors.
Transparency goes a long way. It builds trust and helps customers understand your pricing. You can even use it as a chance to highlight the quality of your ingredients or the value you're providing.
So instead of focusing on the price increase, you're shifting the focus to the value they're getting in return. It's a subtle but powerful shift. This is all great stuff. But let's be realistic, even with the best strategies. There are gonna be bumps in the road when it comes to VAT. What are some common mistakes you see restaurant owners making, and how can they avoid those pitfalls? Welcome back. So we've talked about all the ins and outs of VAT, but let's face it, even with the best strategies, mistakes happen. What are some common VAT blunders you see restaurant owners making?
Honestly, one of the biggest ones is just not staying organized. I know it sounds simple, but you'd be surprised how many struggle with keeping track of their invoices, receipts, sales records, all that.
Yeah, I get it. You're juggling a million things as a restaurant owner. Staff, suppliers, creating amazing food, easy to let the paperwork pile up.
Right. But remember, the Dutch tax authorities want those records for 7 years. So find a system that works, whether it's digital filing accounting software
Hmm.
or even a good old-fashioned filing cabinet. Just make sure you can organize and access everything easily.
Organization is key. It's like having a well-stocked pantry, where everything is. What about other pitfalls? Anything related to the VAT calculations or filing?
Miscalculating VAT or using the wrong rate for certain items, that's another common one. It happens if you're not totally clear on the VAT rules or if you're trying to do everything by hand.
Yeah, those manual calculations can get messy, especially with a big menu and lots of ingredients.
For sure. That's why I always recommend accounting software to automate those calculations. It takes the guesswork out and make sure you're using the right rates.
Like having a digital VAT expert on your team. Always double-checking, making sure you're good.
Exactly. And speaking of staying on track, file those VAT returns on time. The Dutch tax authorities are strict about deadlines. Late filing means fines and penalties.
Got it. No procrastinating when it comes to VAT. Set those reminders, mark those calendars, make it happen.
Absolutely. And one last thing, remember, VAT is always evolving. Rates change, regulations get updated, new interpretations pop up. Stay informed, adapt as you go.
So it's not a set it and forget it kind of thing. You got to stay up to date on the V8 landscape. Be ready to adjust your strategies.
Exactly. Think of it as a continuous learning process. Read industry stuff, attend webinars, talk to your accountant or tax advisor. More knowledge you have, the better you'll navigate the V8 world.
This has been eye-opening. I feel like we've gone from V8 newbies to V8 pros. Any final words of wisdom for our listeners, especially those restaurant owners who might still be feeling a bit overwhelmed?
Honestly, don't let V8 intimidate you. It's a part of doing business, and with the right approach, you can use it to your advantage. Stay organized, use technology, get expert advice when you need it, and remember, knowledge is power when it comes to VAT.
Well said. It's all about taking it step by step. And remembering you don't have to go it alone. Thanks for joining us on this V8 adventure. We'll catch you next time on The Deep Dive.